Good morning, everyone. It is Tuesday, the 15th of September 2020. Hope you're all well. Today, we're going to have a look at the pound versus the dollar currency pair with some technical and fundamental analysis, and also some price targets for importers and exporters to look out for. So let's jump straight into it. I've started off here with a monthly chart, and as we can see, since July 2014, we've been making lower highs, continuously heading lower, and essentially, as you can see from the channel that we have plotted here, we've been in a 6-year downtrend. Now, very recently, in July of this year, we actually broke out and closed above this descending channel, which suggests to us that sterling may now be in a phase where it is ready to start appreciating. For a long time, we felt sterling has been undervalued, and as it stands at the moment, with the currency pair being above this descending channel, it is more of a positive sign. Obviously, this month we can see a massive red candle here. This is, we would attribute to the negativity surrounding the Brexit talks and the increased probability of a no-deal scenario. Investors are taking a very much risk-off approach to sterling, and sort of dumping their sterling in favor of the more safe haven dollar. Which is partly to be expected. But as I said, in terms of a technical perspective, providing we stay above and outside of this descending channel, then we are hoping to see sterling appreciate further. So let's go down to a more granular time frame. If we go down to the weekly time frame, so from a technical perspective, we can see that the 133 area has acted as resistance a number of times. So this also ties in with the recent sell-off that we've seen in the pound. So there's a nice sort of combination of how technicals and fundamentals work together to create some volatility in the market. Obviously, for importers, for our clients, we were getting our clients involved up here and letting them know that this was a potential resistance area, based on the previous history that we have to look at. So we did help to get many of our clients in at the higher end of this recent rally, and recently, as the market has fallen away, we've been able to help a lot of our exporting clients to repatriate dollars that they've had sort of piled up in order to realize their profits, and also helped many of them to essentially lock in future profit margins with the more favorable exchange rate. So that's how things look from a weekly perspective. As you can see, we're still above this this trend line. When I zoom into a daily time frame, it looks a little bit more a little bit closer to the actual line. So from a daily perspective, you can see we've been rejected from the 133 resistance, fallen straight through the 130 support area, and right back to, surprise surprise, the top of our descending channel. So anything that acts as resistance can very easily become support, and here is a perfect example. If I just scroll to the left a little bit of the screen, we can see quite a few times here we were rejected from the top side of this descending channel, most notably in March, when the pandemic was sort of at its height, and we had sort of I believe this was a 13-14% drop in the value of sterling, partly because of where we were technically at the top of this descending channel, and also because of the risk-off appetite due to the coronavirus. So again, another example of technicals and fundamentals working together there. So as it stands, we're sitting at the just above this descending channel. We've used it as support at the moment. So in terms of where we head next, for importers, your target 1 would be 130. Target 2 would be, as I'd say, instead of waiting to see if we can get back to 133, the market might not have enough momentum to do that. So I'd probably stick some price targets around 132 instead, and just sort of front run your orders a little bit, just to be on the safe side. So target 1, 130, target 2, 132, and obviously if we can get back to 133 and above, then that's fantastic for you guys that are importing, looking to make payments, and possibly looking to protect with hedging by fixing your import costs. In terms of exporter targets, if we do manage to fall back within this descending channel, so if we fall back below this descending line here, then the first target would be 126, which has acted as resistance previously, and below that then we'd have to go all the way back down to 122 for our previous support. Obviously you might not want to wait that long, so perhaps 124 would be a better target too. So first target for exporters 126, target 2 124, target 3 around 122, and below that we've got a major support area at 120. At the moment we are leaning more towards a sort of a short-term rally. If we can get back above this 133 area, then we do have some more macro targets all the way up at 140 and sort of 148, but those are sort of, you know, much longer term views that we have. So that's how we're seeing the pound versus the dollar at the moment. I hope you enjoyed this breakdown and analysis. Keep looking out for future videos, and have a great week. Take care.